Hi and welcome to another week ahead video. Now in this trading week we have a couple of very important economic events that can create some trading opportunities for us. On Friday especially we have the infamous NFP, non-farm payrolls, which normally moves the markets in one way or another. But the event that we're going to be focusing on and looking in more detail will be the RBA or Reserve Bank of Australia's monetary policy meeting and rate decision coming up later this week. Now, in this video, we're going to look at our three-step analysis process for planning and preparing for specific risk events. Now, these three steps are, firstly, we're going to look at the baseline expectations for the Australian dollar. Then we're going to look at the baseline expectations for the event, which is the RBA monetary policy meeting and the rate decision. And then thirdly, we'll look at possible sentiment shifts or catalysts that can create some trading opportunities based on this event. So let's jump into the video and we'll go through these three analysis steps. Also, if you're not yet a subscriber to the channel and you want to be notified every time that we release a new video, just click on the subscribe button below as well as the bell notification button and you'll be notified every time that we release a new video. Alright guys, so step one of our analysis process, is finding the baseline for the currency in question. Now that is the Australian dollar. Now we're going to follow the same process like we do every week. We'll go to our Forex Source trading terminal and within the currency research tab, we can find the major currencies fundamental drivers report. Now this report is just a detailed analysis and bias for each of the major currency pairs or currencies. This gets updated every single week and it just gives us the bias as well as the fundamental reasoning around that bias for each of the major currencies. Now, in terms of the Australian dollar specifically, we have recently changed our bias from a weak bearish to a more neutral stance. Now, the predominant themes driving the Australian dollar price action currently is risk sentiment as well as the due to the US-China trade war, as well as RBA's monetary policy outlook. Now, in terms of the trade war, there has been some recent more positive comments coming out, some progress between the two nations, albeit just. There has been some goodwill from both sides, which includes China purchasing more US agricultural products. And from the US side, we have some postponement of certain tariffs. Now, October will be a very important month for trade developments because the two nations are scheduled to meet again in Washington on the 10th and the 11th of October. Then in terms of monetary policy, at this stage, the consensus view is that the RBA will need to cut once more this year, which is expected to happen in this week's meeting. But there are some of the major banks that does not agree that this might happen. Now, the reason why some of the big banks don't agree with this is the more positive tone struck by RBA Governor Lowe in his previous speech that he had, where he stated that the economy has reached a gentle turning point and the long-term view on the economy remains strong. Okay, so that gives us the baseline for the Australian dollar. Then we're going to look at the baseline for the upcoming RBA monetary policy meeting. Now at this stage, it looks like the market is expecting the RBA to shift to a less aggressive easing cycle at this stage, probably due to RBA Governor Lowe's previous upbeat speech about the economy. Some of the things that he said about the economy included that the Australian economy seems to be able to sustain lower rates of unemployment and underemployment than previously thought. Lowe did, however, say that the RBA was prepared to ease further if the need arise to support sustainable growth in the economy. Now, it's interesting to note that after these comments made by Governor Lowe, market pricing for a rate cut for this week fell from 80% probability to just over 60% probability. Most market participants do still expect a 25 basis point cut from the RBA this week, including the four major banks in Australia. However, it is interesting to note that some big banks like ING, Morgan Stanley and Nomura actually expects the RBA to still cut in the November meeting, but to stay on hold at this current week's meeting. Now, the biggest reaction from this week's meeting will most likely not fall on the rate cut itself, but on the accompanying statement. Markets want to see whether the RBA will take a wait and see mode after this cut or whether they will signal that more cuts are definitely on the table in the short-term horizon. Now, if the market comes out as expected with a 25 basis point cut and the statement remains largely unchanged, we might see a type of buy the rumor, sell the fact response, which could see the odd rally, but the sustainability of such a move will be very dependent on the overall risk tone in the market at the time, as well as market expectations for the RBA's monetary policy going forward. Now we can look at possible sentiment shifts that can create some trading opportunities from this event this week. Now, in terms of a dovish sentiment shift, guys, The most dovish reaction will be if the RBA cuts rates by more than the 25 currently priced in by the market, let's say a 50 basis point cut or more. But in this case, the accompanying statement will be very important, because if they cut, let's say, by 50 basis points, now again, this is a very unlikely scenario, which will create a very big dovish shift, but they signal in their statement that they are now done after this cut and would rather go into a wait and see mode. That could actually see an initial spike down in the Australian dollar, but that can be quickly followed by a reversal as the market starts to digest the statement, realizing that, okay, this was a big cut, but they might be done for now. So just keep that in mind for in case we do see a surprise bigger than expected cut. In terms of what hawkish sentiment shifts we can look out for, the most hawkish reaction will be if the RBA does not cut this week, but they also announced that they are done with rate cuts for the time being and will take a more wait and see mode to assess the economic outlook before altering monetary policy again. Now, that could provide us with an opportunity to buy the Australian dollar at market as a phase one sentiment shift. But again, in both these scenarios, what will be very important is what the RBA signals in the accompanying statement. Okay, so what possible currency pairs we can consider in case we see a dovish or a hawkish sentiment shift? Now, in the case of a dovish shift, guys, from the RBA this week, we can look to pair the Australian dollar against something like the yen or the Swiss, which remains fundamentally bullish due to their safe haven appeal with all the trade issues going on as well as the concerns about global growth. However, if risk sentiment is very positive at the time of the RBA meeting, pairing the Australian dollar against something like the Kiwi dollar might be a better option, as the Kiwi dollar should perform well in a positive risk scenario. But just keep in mind that both the Australian dollar and the Kiwi dollar should gain strength in a positive risk tone. So do keep that in mind in case of a dovish shift from the RBA. Now, in case of a hawkish sentiment shift from the RBA this week, we can look to pair the Australian dollar against something like the euro or the pound, which both remains fundamentally bearish. However, as we mentioned above, if the risk sentiment is very positive at that time, the yen or the Swiss will be better options, as positive risk tone usually sees depreciation in safe havens like the yen as well as the Swiss. Now, how can we actually trade this event? Now, this event is valid for trading phase one trades if we do get a clear sentiment shift. Now, if you're interested to learn more about how this phase one trades work, you can check out our news trading strategy playlist on our YouTube channel, where we post weekly examples of how these types of trades play out. If we do get a phase one move generated by a sentiment shift, then we can also look for a possible phase two pullback of that initial move and ride the move out. Now, we post updates on these moves inside our tradable sentiment shift reports inside the Forex Source terminal under the Market Insights tab. Now, you can see each day which sentiment shifts are in play and which ones are still valid for trading the phase two pullbacks. Not every single pullback will be a tradable pullback, even after we see possible phase one shifts happening in the market. So it's very important that you stay updated with the relevant information and have that research-driven approach to make sure that you're always on the right side of the market. Now, you can learn about these type of setups and how they work during our daily live analysis webinars that we have each day at 11:30 BST inside the Forex Source terminal. Guys, thank you for taking the time to watch this video. If you want to learn more about how to trade Forex with economic news events, we actually released a video about this subject that goes into a lot more detail on Friday on the channel. So you can just click on the description card above. It'll take you straight to that video. As always, if you like the content and the video, please click that like and the share button, as it really helps YouTube to share more of our videos and suggest more of our videos to YouTube viewers. And then until the next video, guys, I hope every one of you will have a profitable trading week ahead. Cheers.